There's people playing checkers and there's people playing chess, and we've all heard that kind of statement before. Sometimes there's a situation where the client's talking about rate. I'm going, oh, you actually want to see really tangible results as far as how it is helping improve your net wealth. I think this is a really important conversation for us to have to really differentiate. Are you worried about what the interest rate is, or are you worried about how much interest you're going to pay? Because those are two different conversations. One of them will save you a couple $1,000. The other one's going to save you a couple tens of thousands of dollars.
Congratulations on becoming the Smith Manoeuvre certified professional. What led up to you making the decision to become an SMCP and add this kind of planning into your business?
He said, I've known about this strategy for 17 years. I've been waiting this long to find the person who can show me how to do this. I can honestly say I've never enjoyed the day-to-day of my business as much as I enjoy it now.
Michael, welcome to the first episode of the Mortgage Wealth Podcast. Thank you so much for joining me.
Yeah, honored to be here, my friend. Honored to be here.
Awesome. I'm really glad that you actually suggested to sort of come down here and you're like, hey, should we do some content when I'm in Vancouver? And I'm like, you know what? I've been wanting to get this podcast off the ground. So I'm really stoked that you and I are getting to do this together.
Let's go. That's
all right.
Awesome.
Okay. So first question, or maybe statement question is congratulations on becoming a Smith Manoeuvre certified professional.
Thank you.
And tell me a little bit about what led up to you making the decision to become an SMCP and add this kind of planning into your business?
Yeah, I think that concepts of financial planning and tax efficiency, those have always been things that have been really kind of key on my radar. So when I was back in my banking days, long before I was brokering and writing mortgage plans, I was a branch manager at a major Canadian bank.
Okay.
And so back when I was at the bank, I started doing their kind of internal financial planning designation.
Yep.
And then I realized that being a young guy in the retail banking world, I didn't have a lot of friends who were going to give me investment money to write these financial plans for them. But everybody I knew was buying a house. And at that point, I kind of understood consciously that investments and insurance form part of financial planning, but mortgages also form part of financial planning. And putting the two of them, sort of recognizing that full lens, I went down the road of mortgage advising because I just had so many more friends who were able to do that. But as I've matured and grown in my own development, it kind of has always had me reaching back into that planning mindset. And I think, kind of landing where I am today, it's just a result of I've always had an understanding of how important that is into the mortgage process.
That's interesting. One thing, I always thought I was going to be a financial planner. Yeah. And I think one of the things that attracted me so much to the Smith Manoeuvre was it's really financial planning through mortgage structuring. So you can tell with the accent I'm not from around here. So I only came across the Smith Manoeuvre 4 years ago. But I think one of the things that I drew was just the connection to financial planning, but it was really executed through intelligent mortgage structuring. Yeah. So let's back this up a little bit. I'm intrigued. I forgot that you actually worked for a bank. So you worked for one of the big banks. You were kind of going that financial planning route, but decided to move over into the mortgage world. How long ago did you become a mortgage broker?
I've been for 15 years.
No kidding. Has it been that long?
Yep.
Okay. So that's quite a while. Now, when did you start to look at integrating sort of Smith Manoeuvre and more mortgage-based planning strategies into your business? Was that something that was sort of newer? Because 15 years is a long time. You would have seen a lot of changes. Yeah. So tell us a little bit about the evolution of your career over those 15 years, where you started and kind of how this transition into looking at debt conversion and the Smith Manoeuvre happened.
Yeah, and I think so much when you first start into the industry, you need to sort of play in a bunch of different parts of the sandbox to figure out where you really fit in and what you really, like what drives you about your day to day, right? So I spent a lot of time doing first time home buyers and those kind of segments just naturally because I was just sort of evolving as a young mortgage broker at that point. And as time goes by, you kind of grow up alongside your clients, and that's what I find. And so we've walked through a bunch of different times together, and some clients I've had for this entire time. Yeah. And we start, I think, naturally then going, well, what's next? And what are the other things that we can do? There's so much that you can do with a mortgage, and a lot of people get caught up on, well, it's the rate or it's this, and it's like, there's so much more to that structured planning. So there's, for the better part of my career, I've always been really key on things like the terms and conditions and the total interest cost of carrying that mortgage when you're taking on. Yeah, exactly. So when I was looking at those kinds of concepts, it just kind of was naturally always pushing me. I know there's more. And I started diving in on those strategies really big time and going, there's so much that I can do that I could advise on my current clients, but let alone there's so much that I just want to kind of stand on the rooftops and shout out going, we can do this better than what you've got.
Yeah. I think a mortgage has become so much more than just the debt that we need to get into a property. That's traditionally what most people think. So they think, I need a mortgage to get a property. What's the next question? What's the best rate? Why? Because I want to pay less. That makes sense, right? Yeah. I'm getting a large mortgage. I want a low rate. But I think something that's really important for Canadians to understand is that a mortgage isn't just a piece of debt anymore. It's actually a lever that can be used in the financial plan. And so sort of linking this back to what you were saying, what was your first, because you and I came together through Strategy Hub and through the training that we do around rental cash damming, which is an isolated version of what's called the cash flow dam in the context of the Smith Manoeuvre ecosystem. Was that your first entry point into kind of looking at Smith Manoeuvre type modalities, or had you started to progress away from like rate-based, just mortgage brokering and to the planning side? Was cash damming the first thing, or were you looking at other areas of planning as well?
Yeah, actually, the way that I kind of really got into it is Jason Henneberry and Ryan Wiley ran a boot camp renewal in Vancouver a couple of years ago, and I was like, was just going through some things in life, and I'm like, I just got to get out of Dodge for a little bit. So I hopped on a plane just on a whim, and showed up at this event, and that's when it really started to open up my mind. So we were talking about debt swaps at the time.
Yep.
So that was the main thing that was like, oh, that's genius. It makes perfect sense. Like, I don't know why I didn't think about doing this, implementing it into a mortgage strategy before. So that was kind of step number one. And then I went and started getting on calls talking about strategy, like the cash flow damming. And it was mind blowing because I, have a business where I have lots of clients with rental properties. And that was kind of a little bit of my niche market over the last number of years, was managing clients with rental portfolios. Yeah. So as soon as I started going down the cash damming road, I was like, oh, this is instantly, I can implement this strategy into my current business.
I had a similar experience. So I remember when Jason and Ryan were doing that series here in Vancouver. I was sick at the time, so I couldn't make it. But I had a very similar experience with Jason Henneberry when he was brought into what used to be 10 Loans a Month that Scott Peckford ran, and Ryan Wiley brought Jason in to do, they would call them cohorts, and there would be like a 12-week period. You'd have 6 training sessions with the coach on different topics. And Ryan brought Jason in, and Jason did an info session, right, when we were choosing what coaches to choose for the next period. And Jason presented on rental cash damming, and I said, are those numbers real? He's like, yeah, they're real. I'm like, this is now what I'm doing. Yeah. And I actually, funnily enough, a few weeks earlier, I'd spoken to Robinson Smith about the Smith Manoeuvre. Now I just came across the Smith Manoeuvre. I didn't fully get it. I'm like, well, what do you mean convert your mortgage to a tax deductible investment? And I'm like, I hear what you're saying. I just don't fully grasp it. But when I heard Jason talk about cash damming, and then I realized that cash damming, I said, is this the Smith Manoeuvre? He goes, yeah, it's one part of it. And then I realized that cash damming was just part of this much broader operating system. I was like, literally on the same day I enrolled in Jason's program and the Smith Manoeuvre course. And so I started with cash damming as well, because I saw it as for mortgage brokers, it's just so relevant. As a mortgage broker, we often have clients that have a rental property, and it's just arguably the most relevant strategy for property owners. And you could walk past 100 property investors on the street, and I'd say 99 of them aren't doing it, but 100% should. And so in that was just I saw such a remarkable opportunity. And so I think we kind of maybe had a similar experience when we heard Jason talk about this stuff. So let's talk, and we are going to kind of go back to the original question in a moment. We're taking a little bit of a detour, but let's talk about what happened when you started. You joined Strategy Hub, you started to look at cash damming. How did that change your business? Like what did you start to see practically change, I guess, in your conversations with clients? How did it influence the way you approach your business? Because by this point, you're like 13, 14 years into your business. You're fairly established. What changed?
I've probably never felt more excitement in going to work than I ever have. I mean, a lot of times you find yourself into, you know, a role as an advisor. Like it's a great job on so many levels, but it's because you genuinely like working with people. And what I found is now when I'm bringing on a client and when we're talking about just different accelerators of a Smith Manoeuvre, or if we're talking about specifically on rental cash damming, it's kind of like we're going to be best friends for the next 6 months, because I don't want to rush anything. I want to have lots of time so you can pick up the main concepts pretty quickly, but I want you to really stew on it to understand the road that we're going to go down, because you can understand the concepts, but then actually implementing it are two different things, because we want to make sure we have a perfect degree of accuracy on the implementation process of it, just because there's so much riding on a structure like that. So I find that I've developed into a spot where when I take on a client, we instantly become very close, because we're talking consistently about the structure, and then, you know, we're building the plan and going through that whole process, and I love that end result of like presenting the final plan and saying, this is what our net wealth improvement is going to be by structuring our debt in this way.
I love it. And that's, you know, one thing that Jason Hennebury, he started or was part of a group called the Tax Deductible Mortgage Plan. This is back before the global financial crisis in 2008. And one of the things he said to me when he started running the cash damming training was, if I realized how sticky these clients were when I started doing this in like 2006, 2007, I never would have stopped. Because when you're helping someone with rental cash damming, and you just kind of alluded to it in your response, you're going to be very close to that person for 6 months. Traditional mortgage brokering is collect an application, collect documents, underwrite the file, match the GDS, TDS, and the you know, the scenario to a lender policy, submit, approve, conditions, complete. Done. Next. This is different, because we still need to structure the mortgage, but what we're now doing is we're looking at, okay, mortgage brokering is getting to that completion date. Mortgage planning, which is what we're talking about with cash damming, is like, okay, how is that debt going to interact with your financial life? How is it going to interact with taxes, tax efficiency, the amortization of your rental and your principal residence? And so it kind of changes the dynamic of the relationship from a client to be less transactional and more relationship based, kind of like financial planners are less transactional, they're more planning based. And so with the clients that you started to work with this on, this is a good question. How did you start doing it? So you've seen the light, you're like, oh man, cash damming, that's amazing. I've got all these clients. How did you bridge the gap between, I've been working with clients, I've got this book of business, I've got lots of clients that it could be relevant for. Now I've got this deeper level of understanding of how I can help them convert their non-deductible mortgage into a tax-deductible investment loan through this process. What were your first steps? Did you call clients and you're like, hey, I've got this new strategy, I think you're really suitable for it? Did you email them? Was it just a conversation you had with people when you were, you know, speaking with clients? How did you start to integrate it?
Well, it's really a combination, I think, of multiple facets. Number one, it would be just thinking off the top of my head, oh, these are, you know, 4, 5, 6, 10 clients that I can think of off the top of my head with the rental properties. And I would just reach out to them saying, you know, there's some really great stuff that I think we should really be looking at implementing for your portfolio. And, you know, it kind of took off really quickly from there. When you start working through what the net wealth improvement is, especially when you have like a 20, 25 year amortization for a client, like the numbers are breathtaking as far as you can convert this to being tax deductible in a relatively short period of time.
3, 5, 7 years. Like when you run that kind of rental income through a primary, the speed at which you can convert the debt's pretty remarkable.
So we sort of start into those conversations. Then, you know, people call me and you know, I work very heavily off of referrals. So a lot of times if I get a new phone call, it's like, well, where did you find me, kind of thing. And so I had someone reach out, and we were talking about stuff about a mortgage renewal, and I was, you know, at their mortgage renewal, if everything's kind of going okay, we don't have to do a lot. Like, it's, you know, typically my own policies, if I can't bring value to it, I don't want to waste your time with an application. And just for the sake of closing a mortgage, I want to bring value to your conversation. So, you know, we're kind of having this conversation, and turns out, yeah, I'm probably not going to get involved with that renewal, but what about the way that you're managing your cash flow? So it's a situation where, I would initially say, that I'm not going to bring any extra value to what you're currently doing, but I could bring value to what's happening over here.
Yeah.
And after having the conversation, he said, I've known about this strategy for 17 years. I've been waiting this long to find the person who can show me how to do this.
That's funny. I had that same conversation with a client the other day.
Yeah.
Same conversation. Like, I've known about this for a long time. I just never really knew. I was never able to find someone that was able to articulate and help me with the whole strategy.
Yeah. Yeah. It's really one of those when you can start diving into it and figuring out what the benefits of the tax refunds alone are going to be. So the benefit of moving to have something from non-tax deductible to now being tax deductible, it puts you in a spot where, we could do anything. Like, it seems like that, right? When we're writing a mortgage plan, we can go down many different roads, and we've got some great wealth improvement like that. And that's where we kind of come alongside, the planners who handle the investment and insurance aspect of financial planning.
Yeah.
Right. We really work hand in hand.
Yeah. So, one of the questions I would always get from people is, hey, Nick, I do I need to do the Smith Manoeuvre Certified Professional Programming in order to do rental cash damming? And my answer is no, right? Rental cash damming, when used in isolation, really relevant for mortgage brokers because it's dealing with clients that own a primary residence and a rental property. Mm-hmm. And it's an optimal way to run their income flows through. But I would say no, you don't have to become a Smith Manoeuvre certified professional in order to do the strategy. However, if you really, if you're gravitating towards this and you feel that this is a strategy that you really want to integrate into your business, I say, well, look, the purpose of cash damming is to convert a non-deductible liability into a tax-deductible investment loan. And there are different levers that we can pull on in order to achieve that objective. Yes, rental cash damming and optimizing rental property cash flows is one very effective way, but there's 5 other ways to do it. Mm-hmm. And so I remember having a conversation with you. I'm like, Michael, I think I probably had a conversation with you a few times about expanding the scope of debt conversion modalities so that you can not just sort of focus on the rental properties, but start to broaden the scope to include the debt swap and the plain Jane and the other sort of things. So let's sort of circle back to my original question, which was, tell me about how we came to be where you are, or how you came to be where you are right now. Let's talk about that transition of becoming an SMCP, which only happened in the last few weeks or few months, if memory serves me correctly. What's changed for you since then? Is there anything that any light bulb moments that have gone off, or anything that's impacted in your business?
Well, I think it's I feel like professionalism and demonstrating knowledge, I feel like that's important, right? There's a reason why we've got designations in certain industries and certain sort of marquee moments as far as what you're looking to build and as far as your credibility as a knowledge giver, right? So to me, it was always important to really go down that road and learn that, yes, one aspect of what I'm doing here, specifically the cash damming, I don't necessarily have to really, be SMCP. It doesn't really, I can do that on its own, in its own right? Yeah. But there's so much more to the whole process that I love having these very encompassing conversations with clients to unpack what is it that they really want to be doing and how can we help them hit that goal.
Yeah. I think I always distill it down to there's two of the biggest drags as we go through life is the interest on our debt and the taxes on our income. And everyone's obsessed with buying real estate, with buying their home. It's the same in Australia as in Canada, just buying your principal residence. But doing so comes with it a very large mortgage debt and a huge amount of interest. And I think one of the things that appeal to me so much about the broader operating system of the Smith Manoeuvre is that if you really distill it down, it's about creating an efficient structure within what already exists without changing your cash flow that allows you to meaningfully reduce the impact of interest and taxation through your life. And so now that you've got a broader framework that you're able to operate from, it's not just cash damming and there's those other modalities. Tell me a little bit about, let's get specific. Are you how has it changed the conversations? Like, let's get really granular and really specific. So you're having a conversation. Actually, I'm going to give you a scenario.
Okay.
First call with a client, maybe they're a first-time home buyer. They've got a really good down payment. It's a large mortgage. There's no rental property. They've got good income. What kind of a conversation are you having with that person? I'm assuming that you're going to have the brokering conversation, but is now having a deeper understanding of the Smith Manoeuvre changing the way you communicate to clients?
Yeah, I think so.
Or maybe not yet.
Well, no, I think it was already, like, this was all just part of a natural progression.
Yeah.
Because I definitely in a situation like that would be, opening up conversations about offset mortgages because of the flexibility that we can use that mortgage for in the future. Even though they may not be thinking about doing something today, it would be set up so that if they did want to do something into the future, we could. Yeah. But now all that it does is, put me in a position where I feel like I've got the tools to have those conversations and say, look, not only are these options like available, but like, this is what we can build for you if that's something that you're interested in.
Yeah.
So, it's not even about someone coming in with rental properties or with, non-registered investments, or it's not a referral from a financial planner, but it's still a conversation that I can, highlight. We can build net wealth on this mortgage as well.
Yeah. When I first got my Smith Manoeuvre certification, I remember some of those early calls where I was so excited about this new skill and this new process that I learned to help people convert debt that I could almost hear my clients' eyes glazing over the phone. I say that a lot because it's like I was going through the process of trying to explain something to them. And I could just imagine them thinking, what is this guy talking about? Dude, I want to buy a house. Like, why are you talking to me about tax deductions and investments? Yeah. Like, I'm a first-time home buyer. So what I learned over time was I started to change the way that I communicated. And I would often call it the two conversations. The first, I say, Mr. Client, the first conversation is the reason we're talking, right? It's the purchase, the refinance, the renewal. But then I would often say, like, I'd like to invite you to have a second conversation. And that second conversation is looking deeper at your mortgage and the full amortization of your mortgage. Like, the fact is, you're signing a mortgage contract and that's got a 20 to 30 year amortization. A lot of people are shopping for a 1, 3 or 5 year rate, but they forget to structure and plan for a 20 to 30 year outcome. And so I would often say something along the lines of, are you open to having a conversation around the role and relevance that your mortgage has in the context of the interest and tax you pay throughout your life? And let's see if we can have a deeper planning conversation where we look at how we can, meaningfully save you, quite a lot over your lifetime. Yeah. That didn't come out as eloquently as it normally does. But essentially, I think when I would invite them to have the conversation around the longer term impact of their mortgage, no one actually said no. People would, because people don't know what they don't know. Like, oftentimes it's that what's that saying? Sometimes we know what we know. Sometimes we know what we don't know. But we certainly don't know what we don't know. And I always felt like if I don't present this as an option to the client, they're saying no without knowing what they're saying no to. And so I always, after I got more confident with explaining the Smith Manoeuvre, I always paired it with that two conversation piece. Like, we're always going to talk about your primary objective, but I want to create the intentional space if you're open to having this conversation. And I did that not from the perspective of trying to sell them on it. I wanted them to have the aha moment. I wanted them to have that light bulb moment of like, that actually makes a lot of sense, because once they have that understanding, then I can meaningfully have a conversation with them, because it's not a simple strategy. Or it can come across as simple, but it has some complexity to it. And so that just became a part of my mantra that I would never allow a conversation to go by without trying to create the intentional space. There is a question coming here, I promise you. So I guess, do you, I mean, we don't want to go into conversations with clients with any preconceived ideas, but do you look for how do you authentically bring it up? Like, I know that you're sort of newer to it, but let's say you're speaking to a new person. How are you bringing it up? Have you found yourself a process of how you introduce it into the conversation? Actually, what's funny is I forgot the original question I was going to ask you here. This is what happens on your first podcast, people. So tell me a little bit about what you've found in being able to introduce it to clients.
Yeah, I think I just want to make sure that it's a genuine conversation that we're having, right? And it's really trying to understand where they're at. But a lot of times you'll hear situations where a client is telling you, I want this lower rate. I think that this is what, is important about the mortgage conversation. Then as you unpack it, you're going, oh, you're actually very conscious about the interest that you want to pay, but your structure that you're going about, how you think the traditional process would be. So we've got your 25-year amortization, and people, like you said, don't think about maintaining a 25, 30-year amortization. They're thinking about what's the lowest interest rate that I can get on this short portion of it, right?
Yeah.
And so I do find there's an element where there's people playing checkers and there's people playing chess. And we've all heard that kind of statement before. Yeah. But it's, sometimes there's a situation where the client's talking about rate. I'm going, oh, you actually want to see really tangible results as far as how it is helping improve your net wealth. And so it's a great opportunity to recognize what they're saying and address that, but then also go, I think this is a really important conversation for us to have to really differentiate. Are you worried about what the interest rate is, or are you worried about how much interest you're going to pay? Because those are two different conversations. One of them will save you a couple $1,000. The other one's going to save you a couple tens of thousands of dollars, right?
Or hundreds.
Exactly.
Yeah. There's a big difference between the interest rate you pay and the volume of interest you pay over your amortization.
Absolutely.
Structure first, rate second. Yeah. How are you finding people react to these conversations? So they've before they speak to you, they've never really heard of this stuff. Like, are you getting positive reactions both on whether it's cash damming or plain Smith Manoeuvre stuff? What's been the sort of general theme of reactions that you're getting from clients?
Well, I think we're seeing in this cycle that we're in. So we've got so many mortgages renewing, right now, but we're also seeing people taking on interest rates, 2% higher than what they had before, and how that's going to be impacting their bottom line. And I think more than ever, Canadians are living in this world where this inflation that we've experienced over the last 5 years is real, and our tax, like just the nature of where things are at, we're also being taxed more. And so there's less money left over at the end of the day. And sometimes one of the catchphrases that sticks with me is it's not so much a problem with income and more of the problem of the way our debt is structured, that we could do things to drastically improve and counteract those two measures of inflation and increasing taxes. And those tools are right there for us, but I don't know why more people aren't talking about it.
Yeah. You've hit the percentage of disposable, or the percentage of gross income required to service housing costs and interest is, housing costs and the form in interest associated with the mortgage and taxes, it's huge. Mm-hmm. And I think one of the things that really drew me to the Smith Manoeuvre is I saw this as a way to reduce the negative impact of interest and taxation, and through applying a more intelligent structure for the mortgage. I have two more questions, and then we'll finish up this first podcast episode. And I'm so grateful for you suggesting we do this, because it kind of prompted me to be like, okay, like I wanted to start a podcast, and Michael's like, hey, Nick, I'm coming to Vancouver. Let's record something. So I'm really stoked that you did that. The next question I have before we finish up with the final one, obviously, is, in your words, can you explain to me what you think about the difference between mortgage brokering and mortgage planning?
Yeah, I think that's a very important differentiation, right? I would typically kind of imagine when you're in that element of mortgage brokering, it's very transactional, and you hope the client comes back to you. I hope I'll send them some emails, and I hope they'll call me back or refer me to a friend, and everything kind of is based on how comfortable the client is with the rates that I got them compared to the rest of the market. Mm-hmm. Where I really think planning dives into a whole nother level for, when I'm writing a plan for a client, I'm talking to their accountant, I'm talking to their financial planner, I'm making sure that they understand the ins and outs of what we're doing. It's not just like, here's the mortgage. Yeah. It's, here is everything in our plan, and this is where I think we should be going, and making sure the client's got lots of time for stewing and asking questions and really understanding the concept, so that by the time we implement it, it's not even a question anymore. It just makes perfect sense. They understand it. And I feel like those instances are clients who are they're here for the long haul. And I'll even reference it in my intake conversations going, I kind of look at every client as a 17-year friend. If I haven't paid the mortgage off in 17 years, either I'm not doing something right or we weren't really going to be a good fit anyways. But,
Yeah.
you know, that's the way that I kind of look at my clients. And because there's so much involved in that planning process, I feel like I know them very well, but we're also continually in contact for a longer period of time than just, you know, I can do a mortgage really quickly.
Yeah.
Right. If you've got the documents, I can have it underwritten, pre-approved. I can have it approved in 4 hours, and we're off to the next one.
Yeah.
Whereas with a mortgage plan, we're building a lifestyle, and now we're talking about kids. We're talking about insurance, making sure you've got the right team in place, so you can really, you know, be the best that you can be for your family.
Yeah, I love that. I might riff a little bit on the concept or the difference between what I see as mortgage brokering and mortgage planning. I believe the two can be done independent of each other. I think there's true power when they overlap and someone can both broker and do the plan. Because there's a huge amount of value in being a pure broker, like taking a square peg and fitting it through a round hole. Client's been declined at 2 banks. A broker understands underwriting policy, subtle nuances between lenders, how to get an approval. So brokering is that true art of getting the yes, getting the deal approved, taking it from that first conversation to the completion date, moving on to the next. And there's nothing wrong with being like a problem solver or a friend in the business, someone that just gets it done. But it typically stops, would you agree, once that mortgage completes, file's funded, you've done your compliance package, next, clients on the, you know, they get the drip emails and they've got a 5-year term. So you're probably not, unless something comes up, you're not going to do an awful lot with them. And it's just waiting until the next time there's a need for the mortgage. I think planning asks a different question. Planning asks the question of where mortgage brokering stops, planning starts. Brokering typically starts when the mortgage completes and funds. Mortgage planning, that's actually when the mortgage plan starts.
Yeah, you're absolutely right.
What does this plan do? How is this plan? How is my financial life, my taxation costs, my interest costs, my financial future tied to the debt that I've assumed for my property? And I think that's that mortgage planning is looking at that side of it. And I think there's real power in being able to combine the two. There's nothing wrong. Like there's people out there that can be pure mortgage planners and there's people out there that can be pure brokers, and that's totally fine. I think there's also a meaningful place for those to coexist where someone can both broker and find the solution and oversee the implementation of advanced plan long term. Awesome. Okay. Last question before we turn the tables and you interview me on maybe it's the starting of the Mortgage Mike podcast, right?
Yeah.
Which is, if there's a broker, and hopefully there's lots of brokers listening to this podcast or one of the short form content pieces that have been created from it, what would you say to someone who's a mortgage broker and they're interested in advanced planning? They're interested in the Smith Manoeuvre and the SMCP program. What would you say to that broker?
Well, I think I'm an advocate for what the whole program entails, right? Because when you're brokering, there's an element of, like, you know, we're out there, we're learning, we're sort of studying all these different concepts, but when we're doing Smith Manoeuvre conversations, like it's a next level kind of conversation. So all of a sudden we're in a spot where I really want to learn from what others are doing and put myself in a position where I'm a stronger advisor because of, you know, I can learn off of other files as well. So I find that one of the things that I value the most about, you know, the whole process and being Smith Manoeuvre certified is the amount of conversation that we have amongst the other certified professionals, whether it be accountants, whether it be financial planners, realtors, or brokers, right? There's a vast wealth of knowledge available when you really dive into that plan. But I think until you get into that circle, you don't realize how much is actually out there to learn. So
that's awesome. You know, and a couple of comments. One, a lot of brokers, particularly, it's really cool to see a lot of tenured mortgage brokers that are now coming through and doing the SMCP program. A lot of them have said to me, like, Nick, I thought I knew the Smith Manoeuvre. I had no idea how much depth there was to it. That's one comment. The other one is, you know, a mortgage is a mortgage is a mortgage, right? When you're 10, 15, 20 years in, you're very comfortable, very used to, you know, your role as a mortgage broker. Another thing that those experienced agents sometimes experience is they get a bit nervous because it's something new. But what I've also heard, and I've heard it from you as well, is that I've got this new lease on my business because it's completely changing the conversations that I'm having. It's given me kind of a new lease of interest in my business, being able to have these conversations. And there was one broker, there's something he said that stuck with me, and it's an Ontario broker, an older guy, been doing it for 20 years. He goes, Nick, we always say it's about more than just the rate. But until now, I didn't really feel like I had anything to back that up. And that was a powerful statement to me. The other point that I wanted to mention, God, you want to finish strong on a podcast, right? And your mind goes blank on the last one. But I think, that's what I was going to say. It's interesting because it's a diverse ecosystem. It's not just mortgage brokers. We have CPAs, we have certified financial planners, we have certified life underwriters, we have realtors, we have lawyers. So we've got an interesting mix of professionals like investment advisors, insurance advisors, the rest of it. And so on the training and deal support calls, you can get the insights of the other professions. And that's and we'll finish on this piece, which is the Smith Manoeuvre. It's a multidisciplinary financial strategy. It's not fully owned by any one profession. There's an element that's accounting, there's an element that's planning and investments, and there's an element that's mortgage structuring and mortgage brokering. So having an ecosystem with all those different professions working together, I've found to be incredibly valuable.
Yeah, I don't think I've been into the ecosystem of advanced strategies and really dialing in. Like, there are some elements now that I look back when I would think about the planning processes that I was implementing, not at all where I'm at today, but it's probably 18 months to this point.
Yeah.
And I can honestly say I've never enjoyed the day-to-day of my business as much as I enjoy it now.
See, that's a fantastic testimony right there.
Yeah.
Because I think if you can attach your vocation, like your job, to something that's really meaningful and interesting, like that's, I think, part of the secret sauce of life. Like then your day is not just work; it's actually you're thoroughly integrated and involved in what you're doing.
Yep, absolutely.
Yeah. So, Michael, on that note, I'm going to say thank you for being the first guest on the Mortgage Wealth podcast, and I'll talk to you soon.
Thanks for having me.